Hello everyone, this is Martin. Welcome to another weekly video, and we're going to be looking for trade ideas, winning trades for this coming week, September the 3rd to the 7th. Okay, and at the end of the video you can email me. It's mskyj007@gmail.com. I've got a free 33-page ebook that explains some of my methodology in this video. Okay, before we can get on to the currency charts, please read this. You can always pause the video and take a close look. The videos I produce on a weekly basis are for educational purposes. I want you to understand that. And even though the information and advice I give you is fantastic, in fact, my win-loss ratio has been close to 80%. I want you to understand that always view this video at your own risk, and when you're trading, try not to risk or try not to lose any more than maximum 1 to 2% of your account balance. Okay, we're going to start with the EURUSD right here, daily chart, and you can see each candle here, each price bar is 1 day's worth of movement, 24 hours of price action, and you can see everything to the right side of this red vertical line right here. This is what happened last week. Okay, so you can see last week price did actually go up to this dynamic resistance. You can see that in the dash blue line right here. That is the 89 moving average. So price went up, was rejected off of the resistance here, came down, and now you can see on the charts, you can see I use colors, and when you only see the blue, this indicates that we are in a kind of a sideways market right now. Here, when you see price below the pink, below the blue, we're in a downtrending market. But right now we're in a pullback. This is the pullback, and price bounced off. And so with blue, you have to wait and see what happens. This is a momentum squeeze area, I call that. And you'll get more information on this if you subscribe to my 33-page free ebook. You can email me for that and get the information at the end of this video. But again, we have to wait and see, and I've got two price levels, so I would be confident that price is going to go higher if price can break this level right here above 117.24. Okay, so on the downside though, I would want to wait till price comes below 115.16, and if price breaks this area right here, then you can see we've got this major support zone right here. So if it breaks here, price most likely will come right back down to here to test that again. Okay, but right now we are in a sideways to upwards uptrending market, and I've got my levels here. So above here, you would look at possibly taking a buy trade. Okay, so let me just take that off, and now we move on to the next chart, British Pound USD. And with this one, you can see that price again is a little bit more indicative of a downtrending market. Okay, you can see here, let me just get my marker here. You can see the pink here, pink here, pink here, okay, and even pink here. So when you see price, this is price right here below the pink area, we're looking for sell trades, and we're still looking for sell trades, this time below 128.36. Now, I want to differentiate the two different types of trading styles, aggressive versus conservative, and in this case, the conservative trader would be looking for sells below 128.36, and the reason is because you're waiting for more confirmation. We are technically still in a downtrending market, okay, when you have pink below blue. Just keep that in mind. Now price could break above here, above this level 130.54, and that would be the aggressive trader trading that way. And again, take a look at this dash blue line. This dash blue line would indicate resistance. So if prices break higher, it may not go too high. Just keep in mind the resistance there. Okay, so the next pair, let me just take a look, It's the Australian USD. And here, the Australian dollar is really weak. You can see that we had huge impulsive move to the downside. Three black candles indicates a very impulsive move to the downside. And so you can see we also broke the trend line here. So pink here, we have pink here. I believe Australian dollar is going to keep going down lower, and this is interesting. Just take a look here. Again, I believe price is going to go lower to test this area right here. Okay, and if it breaks 0.7139, then keep selling. Okay, however, price may come down to here and bounce higher. And if we're playing a bounce play or counter trend, I say counter trend because technically you can see price below the pink, so we're looking for sell trades, but counter trend means going against the overall trend. And so if price comes down lower and bounces higher, look for buy above 0.7173. I've got this up arrow right here. You can see that. So buys above 0.7173 on the bounce. Okay. And if it breaks lower below 0.7139 tonight, look at buying. Okay. So that's an indication of what I see happening with this pair. And of course, this corresponds to what's happening with gold. Let me just take that off. Gold is the next currency pair. And you can see gold really has gone sideways. So this is the daily chart. So here we kind of hitting a resistance, okay, and price has gone up, down, and you can see these small little candles here. So we're in a sideways market, and if you're thinking that price is going to go higher, then look at buys above this this line here, this resistance line, okay, sells below here, okay, and if you think price of gold is going to go lower, it's going to first test here and then down to here, okay. So just giving you a heads up. Right now we are in a sideways market. You can see the blue line pretty close to the zero here, and very small momentum bars over there. Okay, so sideways market. Just wait for some sort of breakout to the upside or break down further below. Okay, now we get to the next pair, New Zealand USD, and just like the Australian dollar, first of all, we are in a seller's market. Okay, again, you can see here price right here below pink. Okay, right here price below the pink, and right now we had two bearish candles last week. Okay, and let me just move something. Okay, let me take that off just a second here. I'm not too sure why that moved over. Okay, but I'm going to move over my vertical line so you know what happened last week. Okay, right there. Okay, this is the price action from last week here, and you can see we had breakdown, broke below a previous support right there, and price seems to be heading down lower. So we're looking at first target. If price breaks below 66.02, first target would be here. Second target, you see I've got the blue line right about there. So if it breaks here, it's going to come down lower. But New Zealand, the New Zealand dollar and the Australian dollar were the two weakest individual currencies last week. Just letting you know. Okay, so let's take a look further. Let's take that off, and now we get to the USCAD. The USCAD, there's a kind of an up and down battle going on. Of course, you've all heard by now the trade wars between Canada and US, and you know, it's quite an interesting battle that's going on. So we're trying to come to some sort of an agreement on the trade wars. But anyways, right now I'm looking for further upside. That would be the first thing I'm looking for. And why? Now, this is interesting. On Friday, you can see we had a huge up candle, so the buyers were in control. Sellers brought it down to here, and it did not close above the area, the line between the pink and the blue, right? If it closed above, I'd say for sure look at buys. Price would most likely go higher to retest this upper blue line here. But right now, this is an aggressive move. So look for buys above 130.64. I've got an A there. That means aggressive. And again, the difference between aggressive and conservative traders look for more clue and confirmation. Aggressive traders are likely to get into a trade opportunity sooner and faster. If they're right, they make more money that way. If they're wrong, then they would get out quickly as well. So they would also, like smart aggressive traders, would limit their losses as well. Okay, so in this case, if you're a very aggressive trader, you could look at buys above 130.64. But keep in mind your first of all your trend line here. That acts as dynamic resistance, and also right here, this area. Okay, so if price breaks the trend line, it'll most likely just retest this and then bounce down again. Conservative traders would wait for more evidence, and I've got this price level. So conservative trader would wait for price to come all the way up to here and then look at getting in above 131.56. And on the downside, if you think price is going to collapse back down again, look for sells below 129.62. Okay, so let's take that off and let's get to oil. Talk about oil because the Canadian dollar is tied into the strength of oil, and right now you can see oil has been gaining some momentum. We had some huge up moves in oil, starting with here with a bounce off the 200 SMA, and then we broke above this this line right here, the speed line. So, and then finally you can see we had a huge momentum candle right there. That's a huge momentum candle, which indicates that price would continue going higher, and last week it certainly did. So right now we are at resistance. Price is going possibly sideways, or could come down first a bit and then go back up. So kind of a bounce. You could look for that off of here. But right now, with my easy read charts, okay, these are the easy read charts. You see only blue. Price has gone too far high, too high, and we only have the blue. So blue means most likely price will come down first. And look for further confirmation. Look for some green. Like here's the green. Look for green above blue before you get in, okay? And that's what a conservative trader would do, waiting for the confirmation. The confirmation here that you would look for is green above blue. Now, let's switch the chart really briefly to the 4-hour chart and see if that gives us any clues, okay? So I'm switching to the 4-hour chart, and let's take a look. Okay, let's take a look for a second. So 4-hour, you can see price is just we're in a pullback. So price is already in the green, above the green. Okay, so what that means is price here with this area broke above the broke higher with momentum play. You can see we have the blue, just blue by itself, and when you have blue, you wait for a good momentum candle, and there it is right there. So you could have gotten in on a 4-hour chart right after this candle. Your entry would have been here, your stop loss would have been here, and my goodness, you would have made more than 1-to-1 here, 1 reward to 1 unit of risk, and you actually would have, if staying in the trade, you would have made money all the way up to this area. So right now we're in a pullback again. Pullback means we're green above blue. Okay, and we're looking for a breakout above here if you're a very aggressive trader. Okay, so that's oil. Let's continue and look at US Swiss franc. Okay, so now with this pair, what do we have here? Well, you can see here the Swiss franc. Okay, let me just show you something. So we have two names in a pair, right? The US dollar against the Swiss franc. Which one is the weaker currency, individual currency? Well, it's the US dollar in this case, because if the US here is going down, that means there's tremendous strength in the Swiss franc. Okay, so that's how it works in the with the currency charts. One, you're always buying or selling the first name in the pair. Okay, this is the first name in the pair, and in this case, it is the USD. So right now we are most likely looking for a sell opportunity. However, take a look right here. This candle is getting smaller, so we had a good impulsive move to the downside. All of a sudden, we had a small little bearish candle. Then we had a bullish doji right there. So most likely, price is actually going to go higher further. Okay, just let me take that off for a second, and I want to take a look. Okay, let me take that off. So most likely, price is going to reverse a little bit higher or sideways, and then possibly come down further to retest the major area or level of support right here. Take a look at what the price would be. Okay, and so you can see that's what I see there. However, look for sells. If you think price is going to go lower, look for sells below 0.9666. And the aggressive move, again, the difference between aggressive and conservative traders, look for buy above 0.9712. And why do I say that? Okay, let's take a look. Buy above here is because you can almost expect a turnaround, a price bounces higher again from here, okay, to meet up with the the red zone, and and also take a look here. This is a major line here of a resistance. In this case, you can see this red dashed line right there. Okay, so this red dashed line is going to continue like that. So price most likely will go higher, but aggressive move means the upward the upward reward could be limited. So there may only be a small reward to the upside before price comes back down again. Okay, and to the downside, the conservative trader will just wait. From this point, will do nothing except wait for price to come down below 0.9666. Okay, so conservative trader could actually place a pending sell stop order below that. Okay, so that's the difference between conservative and aggressive trader. Now let's take a look at the next pair, US Japanese yen. Here you can see price really is just kind of, going up and down, up and down. So we're kind of in a sideways market. Take a look. The blue line is at 0, okay, and the momentum bars. So this is the short-term momentum. See the histo bars, which are these little bars here, and they're very tiny. You can hardly see it. Here you can't see it at all. So, and this is the trending indicator. So the filters show that we're in a sideways market, and you'd want to wait for something to happen. You want to have some patience. And another reason for that, I teach you to look at the colors. You can see the colors are very small, but here we don't have any colors. We only have blue. There's only blue. When you see blue by itself, you have to wait for a breakout to the upside or to the downside. You need more confirmation. So I've got an aggressive move. There's an A. A stands for aggressive. Look for buys above 111.23. Keep mind though that we have a previous resistance. So if price breaks higher, price may only come back up to this area to test resistance. Okay. Again, you can. I'm drawing this terrible, guys. Just let me try once more if I can get a straight line. So about there, that would be overall resistance. So if price breaks higher, it may only come to about here. That's the aggressive trader. And if you're conservative, you would wait for price to come below 110.43. But again, here, take a look. We've got the red dashed line, so it may not come down much lower and just test previous support right there. So either way, there's not much happening. I would kind of stay away from this pair. Or just wait for better confirmation. Okay, so let's remove that and go now to some of the cross pairs. We've got the Euro British pound. So we had a huge price went up. You can see here last week, this is last week, everything to the right side of this red vertical line. So price bounced all the way up, well, went up to the trend line. I had drawn this in already in the last few weeks. Okay, just take a look at my previous videos to show, to see that I had actually drawn this in previous videos. So price did go up as expected. Price bounced with a huge bearish candle. Okay, after this candle, I actually would have gotten in. Okay, because this is a reversal candle, and you could have gotten in and made some pips already. Okay, but for this week, we're talking about this week. Look for price to reverse higher once again above 0.8988. That's a level that you could be looking at. Or to the downside, if you think price is going to go lower, wait for price to break 0.8928. Now, I mentioned this price level here, and the reason is because, take a look, guys, we've got price here. The price is green, is above the green, and even here in this pullback, you can see this is a pullback, we still have green. Price did not get lower into the blue area. So we're right now, see this, the area between the green and blue, this price could certainly come down to here and then bounce higher. Look for that bounce above 89.88, right? But however, if it breaks lower, then wait for the break below this one here. So technically we are in an uptrending pattern, although we take a look down below. Okay, this first one here, short-term momentum is to the downside. So this is momentum. This is not trend. This is short-term momentum has turned to the downside. And here, even though we have two pink bars, the trending indicator is still bullish. Because why? I teach you, when you have these bars, all these bars above the zero, take a look, above the zero level, we're technically still in an uptrend. Okay, so hopefully you can understand that. If you want more information, again, email me and I'll give you some information on my new course, and it's called Forex Success in 5 weeks. Okay, let me take that off. We get to the next chart, and the euro, Japanese yen. Okay, so you can see we have some wild swings. Here's the daily chart, and again, let's take a look. Price broke this long-term trend line. You can see right here, broke here. Below here, you could have gotten in anywhere here, but then look at this huge move down, and then all of a sudden reversed, and I had this blue line drawn in the previous video, so in previous couple of videos. So price did bounce higher, and last week you can see everything to the right side of this red vertical line. Price seemed to go up high, bounce down. This is a big black bearish candle, and it looks like price could, well, right now we can't say anything, and I'll tell you why. Again, I teach you in the course. We have this blue area only. You can see it's blue. There are no other colors. There are no pink, there's no green, just blue. So here we want to wait for a momentum breakout candle to give us an indication as to if price is going to go higher or lower. So this is a wait and see situation, and I teach you this in a new course. But right now, wait for price to come above 130.24 for a play to the upside, and for the downside, you could look at and wait for price to come below 128.34. Okay, so that is the EURJPY, and now we move on to the EURAUD. Now, remember, the AUD was one of the weakest currencies last week. Okay, and you can see the reason why euro versus the AUD went up higher. We had 1, 2, 3, 4 huge up candles. Expect price to turn around soon. I've drawn in the resistance line here, so that means that price could still go higher. Okay, could go higher up to about here and then come back down to reverse. So we could have a turnaround, and then this becomes a counter trend play. But if you're an aggressive trader, again, the theme for this week is aggressive versus conservative trading. You can still look at buys above 161.55. I've got an A. This is an aggressive play. So if you think price is going to go higher above here, that's great. Just remember, we've got resistance right here with these blue lines. So price may not go that much higher, but a short-term trader or an intraday trader may want to take a buy trade, even though we've already had 1, 2, 3, 4, 5 buy candles, okay? And sooner or later, you know, price can't keep going up forever. It's got to turn around, okay? So the conservative trader, though, I've got a level here. Let me take that off. Look for sells below 160.47. So right now, you could look at sells below here, aggressive trader above here. And remember, technically, we are in an uptrend. We have green above blue, okay? The price bars are above the green and above the blue. Technically, short-term momentum. Blue line above the red line and green bars. Momentum to the upside is strong. And then the indicator down below here, you can see the green bars above 0. So the trending indicator, we are technically in an uptrend. Okay, so again, you would look for, even if price was to reverse now, you could look at buy. The conservative trader would look for buy trades to the upside. But above here, you would an aggressive trader would look to get in here, hoping to make a few more pips as it goes higher before it turns around. Okay, so now we go on to our second last pair. No, it's the last pair, sorry. British pound, Japanese yen. Well, I've got these lines here. You can see this is support right here. Okay, so this is support. This is support zone. So right now, price has gone up and it's come back down. But the interesting thing about this is, technically, we are in a downtrending market. Okay, let me take that off. Why? Because we have pink below blue. However, see the blue line? It's completely sideways, horizontal. So it's a wait and see situation. And the thing that's interesting is, see this one big, huge white candle on the Wednesday? This was Wednesday's trading of last week. So this is a huge momentum bar to the upside. And what that usually means is that price continues to go, would continue to go higher after you see something like that, after a huge momentum bar. So right now, price could, in fact, and it did not close, you see, this last on Friday's trading did not close below the pink area. So price could technically come down a little bit and then go higher to again retest this first, and then second could retest this area here. So if you want to be a conservative trader and just wait for more clues, look for buys above 145.64. And on the sell side, you could look at sells below this support zone, sell below 142.77. Then, of course, price, if it breaks here, could come all the way back down to retest this previous support. Okay, so that is my take on the currency pairs this week. Some really important economic news coming out very, very soon. Keep that in mind. That will affect the US dollar. And if you want more information on my free course, well, I'm sorry, the course is not free. I have a free 33-page ebook on. It's called Forex Success in 5 Weeks. Email me. My name is Martin. There's my email address right there, mskyj007@gmail.com. And remember to click on the subscribe and like buttons if you want to keep receiving these videos. Take care. We'll talk to you again next week, and careful about your trading, and we'll see you again. Bye for now.